Hi again. This afternoon we are hosting Alex Nergard and Michael Crow from Investigate to discuss investing in network effect, driving value creation. To start, who are Alex and Michael? What make you tick? Why are you in the VC space?
Yeah, very nice to be here. Thank you for the opportunity. I'm from Norway originally. Stayed in Singapore for 10 years. Came here with my wife and son. And the reason I came here 10 years ago was that I were invited here by Andreas Somen Powell from BW Group to build up the corporate VC arm of the group. And 2.5 years ago, I started my own VC, Investigate VC. I have a portfolio of 12 companies now there. And what makes me tick? So I think I'm quite curious of nature. My siblings would probably call me nosy, but I love also tech and gadgets. Always have an interest in that, new innovations, and combined, I love to learn, and that's a great opportunity in the VC space. When you meet enthusiastic founders, you learn something new every time you meet someone, and you learn about new industries, new ways of doing things. It's a great privilege to be able to work in this industry.
So yeah, thank you, Michael, and thank you for allowing us to participate in this conference. I'm Alex. I have a bit of a different background than Michael. On my mother's side, I come from a long line of ship owners, also in Norway. I'm actually the 6th generation in my family, so I was listening to the first panel debate this morning about succession with great interest. My grandfather, who was running the company when I grew up, I'm the oldest grandson, and so we have a natural and very close bond. And he took me around, showing me the ropes of business from a very early age, traveling all around the world. I've learned a lot from him, both in terms of innovation and hard work, and that you need to really work hard to succeed. From my father's side, my father is actually from the venture capital side as well, and he was one of the founders of one of the first venture capital funds in Norway. So I would say with the combination of my grandfather and my father, I've been pushed to work hard and really drive forward. That being said, I actually always wanted to do my own thing. So I moved abroad about 20 years ago, and I've been in Singapore now for a bit over 13 years. I created more or less my own life here. I worked in shipping, same as the family, but for another company. And I've also built a few companies on my own, more in sort of investment banking and structured asset finance. But it's basically helped, of course, shape who I am today and how I'm looking at investments. Ultimately, my goal is to make a positive impact on what I'm doing.
And as a matter of curiosity, how did you start working together?
So again, going back to being here in 2011, we from our side, on the family side, on my father's side, we actually started a family office, our own family office, in 2011. Where our approach is that we are professional investors. We both sort of like to create companies, and we have an entrepreneurial spirit in us. But we have been always very, very active. In that sense, we we have also founded a few companies and been the founding shareholders of, especially in the financing side. So actually a full-fledged bank in Norway, and also a maritime platform, financing platform. So when Michael basically set up Investigate Fund 1, we were one of the first investors. Our primary goal at that stage was to basically grow our startup portfolio and be a part of the early stage tech investments. But secondly, I've known Michael here for many years as well, and his track record and performance in previous jobs I really admired. So it was an obvious thing for us to invest in his first fund. But what that actually resulted in was that we ended up working quite closely together and looking at various investments. So from the portfolio of 12 companies that Investigate has in the first fund, 4 of those were actually driven from our side, and then we also co-invested. So from the family side, we have co-invested in about 6 of the 12 companies that Michael built in the first fund. One of the other things that we really like about Investigate is the fact that he's running a very professional portfolio, again with a very hands-on approach, which has been very important for us and how we think about our family business. And just to put that into context, when we ended up doubling our investments in the first fund. So they had the first close and then they had the last close, and during that time period we actually ended up doubling our investment amount.
So is still, Michael, involved with your family business, or you are focusing now more on the fund?
So I'm still involved in family business to a certain extent, but we have restructured our portfolio now. So we are long only. We used to be a lot more trading in that sense. Now we're long only, which is freeing up a lot of my time. So which is also why I'm then coming on board for the second fund as a full-time partner and on a mutual basis. But of course, I'll also be investing my own capital, and also my family is investing in the second fund.
So Michael, how do you find to work with someone who's already invested in the fund?
So actually, that was a great. The road was created while we were as time went by. So he started as an investor and actually not involved neither on the advisory board or investment committee. But then he came aboard as shortly after he came on the board or the investment committee, and he was also more and more involved in companies we looked at. Some companies he came along with, and some we looked at together. And it's been a great experience. I think we complement each other. Alex with the grounded, common sense approach, and maybe me with a little bit more tech understanding, is actually a very good combination. And we also have, which is very important, I think, the same values. We appreciate integrity and transparency. And just to exemplify that, we've actually walked away from quite attractive deals because there was something that wasn't quite right. So so that's been a great process actually. So I would say he became a part of Investigate even before fund number 2.
Yeah. Alex from Norway, and Michael, you are from Norway also?
Yes.
Oh, okay. So I know it's very early days to speak about it, but the pandemic is hitting. So how your first fund performing?
Okay, so I'm very happy you asked that question, Mohammed, because It's performed quite well. If I might maybe show a slide here. Can you see my slide, Norman?
Yes, we can. Yeah.
So here you have the first fund, the portfolio companies. So 12 companies. You might recognize a couple of names there if you follow the startup scene. Antler is probably the most well-known in many countries. It's a startup generator. But if you look at the right-hand side, you see the accumulated numbers. So we have a 2.3 times MOIC. This is a very young portfolio. So we did our first investment in the beginning of 2018, and the last one we did just a couple of months ago. But we already have a 53% net IRR, and that includes lifetime cost of the fund. So quite good performance, and more good news to come.
Interesting. You also have a bit of different take on what FVZ is. Can you elaborate more?
Yeah, sure. So, I mean, our approach is a little bit different. We'll talk more about this later, but I think just sort of some of the main points are that we are not focused on the vertical. We are actually focusing on a business model called network orchestration. The second thing, which is very important for us, is the seed stage, which basically is investing very early, but it's also during the rounds that we believe would create the most value over time because of the entry evaluation. But with early stage investing, there is obviously the inherent risk. So what we find is very important is that the companies we invest in not only have just the concept and the proof of concept, but they actually have what we define as proof of value, meaning that they either have a revenue or that they have clients or customers, so that they have basically been out there, they have spoken to someone, they have sold their business or what they're doing to someone. And we believe that, that also creates a much sounder business than just, having a great idea. So that's one of the things which we demand from our companies before we invest. In terms of where we invest, I moved to Southeast Asia for a reason, because I see the value here, regardless of industry, but obviously now more important in tech. I think it's also quite interesting to see, Temasek, Google, and Bain came out with this report this year, where they're talking about the growth of the digital economy in Southeast Asia, and that sort of supports also our the macros on our return expectations on our fund, where they're saying basically that the digital economy will grow 3x over the next sort of 5 years. The fourth thing, which is important for us, is obviously, again, going back to early stage, and we're investing mostly in the founders. So the people, it's not so much the company and what they're doing, it's more the people and their motivation and why they're doing it. That's important for us. As Michael spoke about earlier, the integrity and their understanding of the world and how they would like to make an impact is super important for us.
So you believe that track record of the team will reflect the future?
Yeah, absolutely. But the track record, I think, comes from two different things. A lot of people have a lot of track record from business, so they have worked for many years, right? And then they do a startup later on. But we also see great founders that are straight from university. So it's more about I think the mindset and the way they think about the future as well.
Yeah, the drive and grit, which must be incredible to be able to become a successful founder, because that road is not an easy one to start on.
Okay. So what is network orchestration effect? Is it just another buzzword for something that has been around forever?
Yeah, so you're absolutely right. So it's been, the business model has been out there for quite some time. So what is network orchestration business model? So it's the dry and boring definition is companies that enable its network to do information sharing and transactions within that network and share the value created. So obvious examples are like Uber, where you have assets, cars, drivers, people that want to go from A to B. That's a network orchestrator, for example. But all-time examples, that's credit card companies. Long before internet came along, you could take a credit card, go to a cafe, buy a coffee, and the credit card company would pay or settle the bill, and everyone shared the value created. But is it a buzzword? Then it's a very valuable buzzword, I would say. Depending on the statistics, we see that between 70 to 90% of all value created the last few years have been within this business model. So 70 to 90%. And what's quite amazing is that very few are concentrating on this. So if you look at startups, less than 20% of the startups focus on network effects. And that's where we also have a value proposition, because we are being able to educate them and support them in developing these network effects, be aware of it and develop them. And if you look at also other things, if you look at S&P 500 companies over 40 years, we see that they have higher growth, higher profit margins, and much higher valuations. Those companies that have a network orchestrator business model. So we think that's a very proper focus for us to have, because that's where the value is created.
But why does it matter, this network effect? Is it just a common sense?
It is, yes, it is common sense. But as you know, it's very difficult for us to break the mold, to actually facilitate and embrace change. Let me back up a bit. If we were to ask, for example, your organization, Mohammed, if I went to your CEO and asked, could you show me your valuables in the company? I would probably, he or she would probably give me a list of all your tangibles. So your properties, your vehicles, down to mobile phones. And I could see the value, I could see maybe the age, but does that represent the value of your organization? Probably not. If you look at the S&P 500, if I can show you actually a very good overview of why this matters. If you look at S&P 500 market value, in 1975, you could find their market cap. 80% of it you could find on the balance sheet, intangible assets. In 2015, it was reversed. Only 20% of the market cap you could find on their balance sheet as tangible assets. And that shows that we value other things today. And these network effects the touch points you have, and how you extract value out of them. That's what represents a company's value today. And if you also draw that further, what should you then, or ask yourself the question, what should you then have attention on? We think companies, so this is not just startups, but also mature companies in traditional industries. You know, you should have attention to map out your network and see how you can co-create, which is a very important part of network orchestration. So how can you co-create products and services together with your users, your customers, whoever it is? And just to give you an example, what does that mean? Like YouTube in itself is not worth quite a lot of money. You know, we could start up by YouTube number 2 today, but it's the content on YouTube that's valuable, and it's created by the users. That also represents a network effect for them. That, you know, they launch a product, YouTube, that attracts users, and the users generate content or data, which makes the YouTube then more attractive, and you get this positive reinforcing product value effect. And then you also get secondary effects, where actually the data generated can create other products, which we also see in our product or portfolio companies, where you actually get to launch products nobody else can launch if you don't collect all that data first. And that creates tremendous defensibility when you manage to do that.
With reference to Alex's discussion earlier, he was mentioning about the vertical. So what do you mean with the business model being more important than vertical? Many point, for example, logistical technology, supply chain management to be one of the fastest growing sector. Can you elaborate more, please?
Sure. So, I mean, again, what we're talking about here is our belief. It's obviously network orchestration. So if you can bring up just a slide, which I think provides a very good overview on basically some of the companies that you all know today and see today. So just give us a second here, sorry. So essentially, I think you all know all of these companies. And what you're seeing on the left-hand side is all companies that are driven by network orchestration in one shape or form. And obviously, as you see, you know, the market cap on comparable industries is quite interesting. So we believe that, you know, this is obviously companies that you would probably invest in today, but we believe that the companies we are investing in from our side that are the startups today will be some of these companies in the future. One of the important things to note in terms of verticals is that if you were to categorize and say fintech, for argument's sake, and you would be either from a corporate investor or a venture capital investor, you would say that, okay, I'm only going to focus on fintech. You would never have, for instance, invested in Grab in the early stage, because today, I mean, at that point in time, it was ride-hailing, sharing, same as Uber. Now it is arguably one of the most valuable fintech companies in Southeast Asia. So again, the jumping on verticals goes back to basically that early stage investment is also investment in people. Our approach to this is that we are active. I mean, we have the mentality of professional investors. We work with the founders instead of just investing and letting them grow on their own. We really want to work with them and also demand a level of good corporate governance from them. So our aspect of this is that we want to grow with the companies and make them come to a level where their business focus makes sense before they do a next round of evaluation. So we are not necessarily driven, obviously we're a venture capital fund, but we don't want to focus solely on repricing. We want to focus on building sustainable companies that will have an impact and will matter in the future. Basically.
Yeah, that's something very important. Since you opened this subject, can you just tell us more about how do you source your deals? What's your filtering process? How do you do your investment, your ticket size before we move to the last topic in our discussion?
Sure. Absolutely. So I mean, to touch a little bit on that, I mean, we, as we speak, we're actually in the process of building out the data solution. What that means is that we invest in network orchestration companies, but we actually want to be a network orchestration business model driven fund as well. So essentially, we're building a data solution that will help us interact with companies in a better way. So and will help us with deal sourcing as well from various data points and data providers that we have engaged with and have a network with around the world.
And just to add to that, so you know, the data side, which is very interesting, but no matter what we're doing, you know, we have deal flow from all the startup communities here in the region. You know, historically, I've looked at between 300 and 500 companies a year. But with the data solution, we're doing something interesting there. We'll actually have a much greater deal flow. I can also mention that, you know, the office we're sitting in now is one of our portfolio companies. We share office with Antler. And Antler is a VC in itself. We invested in the management company before it actually established the funds. But they are worldwide and they attract talent and put them together in a cohort and a program where they can find a co-founder and develop the right idea and be coached and avoid the common mistakes, have the right founder team, and then Antler will sponsor them or invest in them $100,000. And so we sit beside a lot of growth. We sit in the midst of it, and we advise some of the companies. We get to know the founders, and of course, Antler, they create one. I think now they're creating like 200 companies a year. That will increase to 500 soon. So that's also one of the deal flows we have first-hand knowledge to before anyone else.
Good. Any special thoughts for the family offices before we close the session? I'll take a question.
Yeah. So I think we live in interesting times. If you look at, so I followed the program now for during this summit, and what I understand is family offices have very diversified portfolios, and maybe not so much on the VC side, startup especially, early stage. And we see that value creation happens earlier and earlier. And if I can just exemplify that by, if you look at the PE industry, that came about maybe 60 years ago. And so that was mid-market companies, M&A activities, you could create value out of that. And then the VC industry grew up a couple of decades later. And then you got accelerators that even went in earlier than VCs. And then you have Antler, which I talked about. They start with the talent. And why is that so? It's because there's so much disruption being enabled by technology today. If we had a business idea that involved AI and big data analysis 6 years ago, we had to build up the infrastructure first. That would probably take a year or millions of dollars. Today, in 2 minutes, we can get the infrastructure up and running, and we can disrupt industries. So, this has led to, for example, Fortune 500 companies. Half of them have been replaced since 2000. And 60 years ago, the average lifespan of a Fortune 500 company was more than 50 years. Today, it's 12 years. So, and these changes will just happen quicker and quicker. So what you thought would be a safe investment today might not be a safe investment tomorrow. And these changes happen faster and faster. And I think it's more important than ever to have, whether you build up the competency yourself or invest in someone else, just have a finger on the pulse of what's happening on the startup side. That's very important, and you need that exposure to get that understanding. And then you can see risk and opportunities in the rest of your portfolio.
Good. Alex, as the family office, since you have a two hat, during the pandemic, through my discussion with friends, other family that I know, some families, they say, no, we will not invest, we will just wait and observe until like things can become clear. And some families are investing heavily. What's your view on that?
I think we've been more in the latter category. So we freed up some positions during COVID that we had been waiting to get out of for a long time. But that's why we changed the strategy to long only, because we wanted to focus on fewer companies and be super long term, basically. So that's on the family, not the verification side. I mean, but that's also why we also felt that I felt that the venture capital industry makes more sense as well, is because of this disruption that's happening due to COVID, and you see this all across the world. And like, I've been speaking to a lot of my friends and the people that I know back home and that are working in very conservative and other industries, and they've been always, I mean, take shipping for example. It's probably one of the most conservative businesses still in the world, right? I mean, everything is done the same way. And I'm not trying to offend anyone if anyone is in shipping here, but I mean, my family is still, so it's so I'm talking against myself here as well. But it's super conservative. And had I had this conversation a year back with my family, they would have not listened to me. But now, because of everything that's moving so rapidly, you need to be involved in tech to stay relevant. So if you choose to just follow the old footpath and do what my grandparents did and the people before that as well, unfortunately, I think that the business will eventually go down.
So I mentioned.
Sorry, Michael. Please go ahead.
No, so I had the pleasure. I don't know if the audience were present at the panel debate or discussion we had yesterday about technology, but I mentioned, I sit as a legacy investment. I sit on a board of a traditional Norwegian company, industrial company. They have environmentally friendly greases and so on. But I've been fighting to have board meetings on video conferences and use online collaborative tools to make the work we're doing on the board much more efficient. And I've done that for years without much success. And then COVID came, 2 weeks, we are doing everything, you know, and people are realizing, members, wow, we saved time. And my estimate is we saved 50% time spent on the board. That's, you know, we forget, many of us that are tech savvy forget that actually, you know, 80% of the world is not using technology the way they could. But COVID has changed this quite dramatically and opened up or accelerated this growth.
I think we are running out of time. Alex, is there any question from the audience?
So there's no questions which have come in from the live audience. But if any of the participants watching on demand would like to ask any questions, what's the best way they can reach out to you?
I'll do type your email address.
Yeah.
Yeah. So yeah, I mean, we're happy to engage. We are here. We are in Singapore. So, but we see now that the video conference works pretty well. So you know, happy to engage over there as well.
Good. If we can have a slide for your contact details.
Yeah.
Yeah.
Yes. So we're just. So I just sent it on the chat there.
Okay, and in case the viewers that are watching on demand can't see that, it's Michael Croft, which is mk@investigatevc.com, and Alex Nergard, an@investigate.vc.com. There we go. Perfect.
Yeah.
Good.
Thank you so much, Michael and Alex.
Thank you, Alan. Thank you very much. It's been a pleasure.
Okay. Thank you. Bye-bye.
Thank you. Bye-bye.
Bye.